Today's episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions, bored of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And a good afternoon. Welcome into Market Talk for this Thursday, June 17th. I am your host, Jesse Allen. It's good to have you back with us once again here for another episode of the show. Find us online, markettalkag.com, as we were brought to you by our friends at Growmark FS. Find us online. You can find all our streaming sources, all the ways to download and subscribe to the podcast. Leave us a review. Find our social media and much more. It's all online, markettalkag.com. Well, if you've been following along with the market trade today, it's pretty hard to explain, honestly. Just a rough day. Let's bring in our friend John Heinberg with Total Farm Marketing to dive into this right away. And John, about the only thing I could come up with to even begin to explain today is ugly. That's about it.
Yeah, that's the best word for it. It's another one of those lovely risk-off type trading days. It doesn't matter what sector of the marketplace we're in, between equities, livestock, grains, softs, energies. We just saw strong selling pressure throughout the entire complex. And, there's a lot of things moving on here. I know everybody's so focused on weather and things of that nature for the grain markets. Weather's probably number 3 or 4 on the list in my mind today in terms of what really probably happened here as we saw these strong sell-offs. So, let's go back to yesterday. And that was probably where things really started maybe accelerating. It was when the Fed had its meeting yesterday afternoon. Fed Chair Powell kind of came out with a bit of a rosier look than most people anticipated, talked about possibly, tightening up the money flow a little earlier than anticipated. U.S. dollar index has now surged to its highest level in 5-6 weeks, opening the upside technically. And I think that just sent this money to the sidelines, regardless what market is. I mean, you understand, and we all know how much money's been pumped into the system to overinflate the values of everything. And now that maybe some of that money might start getting pulled away, people are starting to take those profits. And then from there, again, we're dealing with a market that doesn't have the human element in it like we normally have seen. Those computers just kept on trading, kept on pushing, blowing through stops, taking out technical barriers. And obviously, we're hammering this thing way down much further probably than it needs to be.
Well, and John, you mentioned the Fed's news, and I would agree. I believe that's kind of the number one thing here the last couple of days. We also back up to last week, Thursday, Friday, we get the rumors about the Biden administration with the biofuel blending requirements, and we're still looking for, some more guidance on that and what that's going to look like, but it's still affecting our markets. And then, like you said, weather seems to be like 3rd or 4th down the list, and really it seems like, I wonder if maybe this is a bit of our quote-unquote black swan event in this market. We're just getting 3 or 4 big things that are just bearish to this grain market right now, whether we're talking corn, beans, wheat, you name it. Just a lot of bearish influence right now.
Yeah, I agree with you. And again, let's go back to Thursday. USDA supply demand report comes out, friendly for corn, okay? Little negative on the bean side. We didn't like the fact that we had an extra 1 million metric tons added to the Brazilian crop. We didn't like the fact that we put 15 million bushels on the carryout. I know that's minor and we're still at historic levels, but it broke a trend in that regard. Then that was also the day that announcement came out from the Biden administration about those reblending requirements and, at least floating the balloon of maybe we'll look at them, okay? There's nothing concrete coming out of that yet. Probably nothing will. We'll see. But that was enough to turn that, first off, that soybean oil market around, because that was a market that was red hot, hitting all-time highs that day, 73, 74 per pound on that July contract. And since then, with today's closes, now we've lost over $17. That was a lot of the strength that was in the bean market as well, beyond just the tight supplies and the demand, was just the push higher by that soybean oil market. And now that it's accelerating itself to the downside, it's pulling beans right with it. And obviously the complex is still just going to see soybean meal fall as well. And again, soybean oil finished expanded limits down today. So now we need to see what the next target is. Does that continue to put pressure on beans as we came close to the expanded limits on soybeans again today? The thing is, in the bean complex, if one of those three ingredients, meal, oil, or beans, hits limit down, the entire complex reflects the expanded limits the next day. So that's going to open up this market for further downside move, in terms of what beans could do tomorrow. Now, is it rational? Probably not. Is it where we needed to be at this time frame in terms of limiting supply or limiting demand and rationing supply? Obviously not. We're back to where we were in January before farmers were putting the stuff in the ground and starting to figure out the crop for the year. And we were concerned back then when we were trading at $12.50 November beans that we wouldn't be rationing supplies. And we sure as heck aren't doing it now with the weather that is out there and the concerns that we have regarding this crop.
Well, you mentioned the expanded limits in the soy market. We're going to see those in corn tomorrow as well, as we finished limit down today in the corn market. Hogs were limit down as well, so we're going to see that in hogs again tomorrow, and that was expanded limits at hogs today. So, a lot of volatility here. I know you fielded a few calls today. I'm sure that a lot of other folks in your line of work have been fielding calls today wondering, should I jump into this market, with it falling out from underneath? Is this a spot to maybe jump in if I need to make a little more sales? But, I find it hard to believe that, this is a good time to jump in and do anything right now. John, what do you think?
It is a little bit, obviously we're probably going to over accelerate this to the downside. It's probably in the long run going to turn into an opportunity for some buying opportunity here, especially if the weather doesn't straighten out. But at the same time, you still got some pretty good value. December corn down 532 today. I know I talked to a few guys when we were trading around the 550 window. I said, hey, let's move a little more corn here if you feel like you got the bushels to do it. It's not where we were at the highs, but it's better than where we could be. So stay disciplined, still look at good value, look at it that way. This thing might get uglier tomorrow. We might see a snap back just because of being Friday. Obviously, I think what happens on the radar tonight, there's a lot of rain forecasted in some regions. It'll be nice to see it come through. It is even going to be enough. That'll be the question we'll answer down the road in Iowa, as well as in southern Wisconsin, Minnesota, where we've been missing rain for weeks on end here, and now dealing with hot temperatures. So what I was kind of talking about with clients today, at least where we are, if we got some sales in that we're a little disappointed about longer term, here's some great opportunity to go back and look at some of those call option strategies out over top of those sales. Everything's on sale here. If you don't think the market's going to hold, go put price target down a little bit lower to pick up some of those strikes. I was looking at January calls for beans today. I'll probably start talking and then looking at March calls for corn. Really get some long-term ownership over those early sales. If we're really nervous, we can throw some cheap puts in here to get us through the next couple of weeks. Obviously, don't forget, we have a major report coming up at the end of this month. I think that's a part of this too, is there's a lot of indecision where that report's going to put us in terms of acres, as well as the grain stocks, and maybe just seeing the money moving to the sidelines, taking back, let that report hit, reassess the situation, and prepare for what's going to be ahead of us over the next handful of months.
Well, and John, looking at the weather, I know that's not the big topic here today, but you mentioned Iowa, Minnesota, and looking at some of the latest numbers from Iowa State University, this one blew me away. Quite a few of those crop districts, Iowa, Minnesota, southern Wisconsin, the driest conditions they've had in 129 years. Mm-hmm. That's just that blows you away, and it just makes you wonder, like, okay, if we can get some rains to maybe at least buy us a little sliver of time here, if this weather pattern does hold and goes cooler and wetter for some areas, you'd have to think that might be a catalyst to keep a lid on these markets. But I know the weather models, they are just, they're all over the place, John. It's hard to watch because it seems like every 6 hours, 12 hours, these models just continue to differ.
Yeah, and that's the other little unknown variable that's coming into play here too in the background. And you want to keep an eye on the weather, but like you said, every 6 hours it changes. Okay, now we're getting this much rain. Maybe we get this much rain. This model's wet. This model's dry, and just the erratic nature of what we're dealing with in information. That might also be some of the reason we're seeing the sell-off too. Is it's just hard to peg. And it's a good time to just step aside and let this market shake itself out and then reassess it after we get that acre number here at the end of the month. Because then we'll be able to put numbers into a balance sheet and see where we are. But yeah, I agree with you. And it kind of was a little alarmed about where this market was going on Tuesday after we got those crop ratings on Monday. We saw that strong drop in the Iowa, Illinois, and Minnesota crops for both corn and beans, and the market didn't do anything with them. And so that told me right there that we had something brewing that was a little different than just a typical sell-off. And again, it was probably not focused on fundamentals, but more on the technical side, looking at those outside variables, between the dollar, between the Fed meeting this week, and what's happening in terms of inflation numbers, all those things that kind of come out here in the last 6-7 days.
Very, very true. Let's switch gears. Let's talk the cattle market here a little bit. And the cattle market, has been maybe the lone bright spot this week. And then, we get to the close on Thursday and we turn it lower, and a little bit of a head scratcher there. Just, I think you told me before we jumped on the air, just when you thought the cattle market was ready to do something, then Thursday happened. And I still think, though, that out of everything, there's at least maybe some bright spots in this cattle market. What do you think?
I'm a little bit cautious on that. I mean, I love the fact cash trade popped up this week, 122, 124. I know I had somebody in my group that pushed even 125 on an isolated trade. So there was some good strength there. That's what fueled the rally up to where we were yesterday, new contract high in August. But even after yesterday afternoon, I know talking with a couple cattle clients, I was very concerned that maybe we got a little too far too fast. Just a handful of days ago, we were sitting at 114 after the JBS incident, and now we're trading 125, pushing 126 on the August contract. That was a pretty big, quick rally. Now, obviously, it got swept up today within the sell pressure of the hog market as well as the other commodities. But the one thing I am watching that was a concern point for me, even though cash has popped up, and those retail values have really gotten the rug pulled out from underneath them the last couple of days. So that could be a bit of a signal that the seasonal demand peak is here. Maybe we're working ourselves towards a summer low. Now that August contract kind of came back today to trend line resistance that we broke through yesterday or the day before. If you draw a line across the highs going back from April, we broke through that, pushed to the new contract high. Now we're right back retesting that trend line. So tomorrow's going to be a key day. I think overall in that cattle market, whether that was just a bit of a flash and a turn to the upside, or if we can hold here and maybe still have solid close on the week, then maybe we can build off this area. A lot of swing price around this 121, 122 in the August contract as the other direction. We can go higher or lower. So tomorrow I'm going to really be watching what's happening. And if we come back tonight and retail values are down another $2, $3, $4, $5 like we saw yesterday, or even we saw at midday today, that would make me very concerned that this cattle market may have put a little bit of a peak in here, and maybe we're going to go back and retest that 114 low from just a few days back.
John, hog market, I mentioned this earlier, expanded limits again today, so we're going to see those limits expand on Friday. Just a rough go of it the last week or so in this hog market. Product prices taking a hit. China, a lot of things fueling into this hog market. Any thoughts on where we go from here in hogs, John?
Well, we take a look at today's close and that the July and the August expanded limits down 450 lower, targeting probably a 675 limit tomorrow. I'll double check that later, but I believe that's where we go to. This was a market when you talk about the money flow, the funds are extremely long hogs, almost historically long in this window. Again, another market that was probably propped up with the money flow that was out there, and now that money's ripping to the sidelines. You mentioned a couple things that came into play. Obviously, China came out yesterday with their ag ministry, talking where the May hog herd was, getting back to the pre-AFS levels. as well as, don't forget we got July 1st coming. We had that court order that's going to slow down the packing line pace starting here on the 1st of July. I know there's some negotiations to possibly find a way around that, but if that happens, that's going to back up the supply lines in terms of the slaughter hog. So that's going to put pressure on the cash market. So maybe we're pricing a little bit of that in here. And then obviously, technically, we broke apart with the gaps lower in the last couple of sessions, opens that door up for just additional liquidation. We got a big spread between those July hogs as well as those winter months, and sure feels like we want to tighten that spread up right now in this window. Even though the demand side of the equation is staying pretty well, the cash market's still staying fairly supported. But like in cattle, we're starting to see those retail values roll over a little bit in value, and that's another sign that maybe we're getting to a bit of a seasonal peak here, even though that hog market, might be longer term supported. Now we got hogs and pigs numbers coming next week. We'll have to see how that's going, what's going to show us on the expansion, where we're at in sow numbers. So we could get a pretty good correction here and get some friendly news next week off of quarterly hogs and pigs that might open this market back up again, because if hog numbers are coming down with the demand where it is, even if the Chinese are backing out a little bit, the domestic demand from Mexico, as well as other major importers, is still very strong.
John, it's been a busy day. It's been a rough day to watch everything. Any other final thoughts you have for us before I let you go?
Again, markets can be irrational a lot longer sometimes than we can be solvent. I know that's an old saying, but it seems to be the case here. Again, there's going to be some value here. The weather story has not gone away, but right now this isn't, outside the ag news sector. This is just a technical kind of a washout as this money's moving to the sidelines. Pick your spots carefully, stay disciplined to targets, and, go from there. Now, realistically, it's all going to be about that acre report the next couple of weeks. We need to know what those acres are, whether they're right and wrong, understand what the methodology is, how the USDA does things with their yield forecast. This acre number plus that yield number we're dealing with out there, that 179.5 on corn and, the near 50 bushels on beans, that's the number we'll use for the July, August, and maybe in September they'll make some changes barring any real weather events. So that's kind of why maybe you're in here. If we get a big acre number with that big yield, this supply might look a little heavy, and this market might just flatten itself out and wait till the fall again, like we saw last fall, when the market can really kick in.
John, if producers need any advice, I know you and the team there at Total Farm Marketing can help them out. They just need to give you a phone call, email, check out the website. A lot of different ways to get in touch with you.
Love to chat with them anytime. Give me a call at 800-334-9779 or shoot me an email at johnh@totalfarmmarketing.com. And again, don't forget about that website, totalfarmmarketing.com. You got a lot of great information there, market updates, weather, news events, webinars. Feel free to check out the information there and feel free to contact me.
Well, John, appreciate the time as always. Let's hope for a better day on Friday in the market trade. Thanks so much, and we will talk to you next week. Have a great weekend.
You too. Thanks again for your time.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk, brought to you by Growmark FS. Find us online, markettalkag.com. This has been the Thursday, June 17th edition of the show. I'm Jesse Allen. Have a great afternoon.